Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for May 15th, 2022. I have a lot of huge announcements today, and actually we have something really special for you today. At the end of this video, Grega Horvat is going to go through the Elliot Wave analysis of a lot of different instruments. I think he's going to cover the S&P, the DAX, probably some crypto. He's going to go on for a while, so I'm going to get to that in a few moments. There's a few things that I need to look at that I want to brief you all on this next week. So let's start off with this, just a little bit of housekeeping. Next week, starting on Monday, you will be able to listen to the Flow Show. It is a free webinar for European and Asian traders to help prepare you for the trading session and prepare you for the North American session. So while I'm sleeping, our team and Ryan Littlestone from Forex Flow Live, who has joined our team over the last year, him, K-Man, Stelios, Steve, Grega, Andre, Leandro, a lot of our European team members, they'll be joining the Flow Show. It is a free webinar for you. So this is a huge benefit for you guys just to prepare you for the trading day. So make sure you tune in. The link to this new series is down below. It is free to register. Also, we have soft launched it this last week with the Forex Analytics subscribers. So now it's going to be open to the public. We just needed to make sure that we got the kinks out. So congratulations for that. That's for all of you. Now, I want to talk a little bit about this. Obviously I want to talk a little bit about what's going on and the markets in general. And I think I'd be remiss not to talk about the elephant in the room, which is obviously the crypto market. We need to talk a little bit about Bitcoin. Bitcoin broke this major channel that we were following, and everybody's expecting a move to 20,000. I mean, that's the big breakout point from back here in 2017. We probed through some horizontal support. We're trying to get a foothold back above that previous, support. I don't think the worst has happened yet. Matter of fact, I think any rally towards 35,000, 34,000, probably going to find some sellers. But the reason why I'm mentioning this is because, the market is laser focused on catalysts that may drive continued risk aversion. We got a short covering rally in the S&P at the end of the week, but for all intents and purposes, the S&P is developing that head and shoulder pattern, and rallies, back to 4,100, maybe 4,150, probably are going to find resistance. And, we're going to be taking cues from markets, and a lot of them are going to be with the crypto market. Obviously, there was a lot of carnage with Luna and other altcoins this week. And so the market's going to be looking at those risk assets like Bitcoin and really taking cues from them. So make sure you keep an eye on Bitcoin. But I also really want to talk about the euro dollar. And the euro dollar, we've broken some really key levels of support. We've identified those since the creation of the euro back in 2000. We've created through a lot of that support. We're testing levels we have not seen since 2016. Or actually the beginning of 2017, rather. That's when those spike lows occurred. We tested those late in the week, and as you can see, the euro dollar has bounced back a little bit, but really we have to get back above the 106.50, which is the previous support from the post-COVID spike lows. We have to break back above those highs to take this downside pressure off. Now, there is a lot happening this week, which I'm going to get into here in just a moment. But I also want to discuss like the cable. The cable is extremely heavy. We are now, testing some levels we haven't seen since 2020. We are in between big fib levels. But I also want to talk really quick before I get into what's happening this next week that we need to really focus on. Let's talk about the Aussie dollar. The Aussie dollar has dropped to levels that I thought we would bounce from. I actually was long Aussie at the end of the week last week. I picked some up, as I've been mentioning to you all for the last several months, wanting to buy the Aussie below 70 cents. I ended up going into the weekend flat after picking it up down here, sub 69 cents. I still think the Aussie might forge a major low, but obviously with the environment that we're dealing with stocks so weak, it's hard to, just get long the Aussie and hold on to the Aussie. A move back above 70 and a, daily, weekly close above these levels is going to signal to me maybe a false breakdown. But in Australia, This week we have employment data. We have wage price index, which is, obviously employment, wages, and you can see inflationary pressures through that. And also there's parliamentary elections at the end of the week. So there's a lot that could really move the Aussie. And then on top of that, risk appetite and risk aversion, that's going to be a driver of the markets going into the next week as well. So there's so much to be thinking about as we talk about the dollar. The dollar is up at major resistance. Now let's talk about this for a second, and then I'm gonna pass you off to Grega Horvat. We did challenge the 105 level, which is the 161% extension of the last drop when we held the 102.30 level. Now, if you don't know why we held the 102.30 level, let me just go ahead and say, if you haven't been joining the daily F.A.C.E webinars that are also free for you, make sure you click the link down below in the description or find the link on the webinars page on the Forex Analytics site. It is free for you to attend to hear not only my analysis, but the rest of the team and our analysis on the markets. This 102.30 level was a very big level of support. If you connect the highs from 2017 or the spike high right here at the end of the year 2016, the COVID spike high, that's the COVID lockdown spike high, and the low that we hit 2 weeks ago, that comes in around 102.30 to 50, depending on how you draw that trend line. That tells you that is the major level of support for the dollar index. While we're above 102.30, 102.50, roughly that area, you have to look at the dollar from a more bullish point of view. If we drop below that level, that would be A, false breakout, B, cracking of major support levels, C, that would signal a near-term pullback in the dollar. Are we there yet? No, we're not. And matter of fact, support for this next week is going to be 104, the breakout point here, which is the green line. But just keep in mind, the dollar index has been divergent. It's very bullish dollar sentiment as of late. Everybody believes the dollar is going higher, which, we start to get in that risk territory where, the masses think the dollar is going higher, which means that we might actually pull back soon. So just be on the lookout for that as we head into the next week. Now, before I pass you over to Grega Horvat, I need to mention this. The sponsor of this webinar is the Trader Funding Program. So if you haven't checked out the Trader Funding Program, make sure you do so. This is a way that a lot of traders like yourselves, you might want to access larger amounts of money because you don't have it available to you. Maybe you just don't want to trade your own money. Well, if you want to try to do that and get Forex Analytics for free for a certain period of time based on which evaluation you want to take, you can be part of the Forex Analytics community, which is one of the largest trading communities out there right now. There is an evaluation fee, but if you feel that you can trade a paper trading account, a demo account, and make 10% return without having more than a 5% drawdown that's trailing, then check out the Trader Funding Programs. Check out the FAQs. There's a lot of FAQs. You can read through them. There's also a 2-minute video at the very bottom of that page. You'll see myself and in a 2-minute explainer video. So check it out. See if it's something for you. We have traders that qualify for live bigger trading accounts every single week now, and we've been doing this now for a couple of months. So if it's any interest to you, check out our sponsor. So with that being said, I'm going to pass you over to Grega Horvat. Enjoy his analysis and have a great trading week. I'll see you Monday morning on the F.A.C.E webinar. Don't forget the Flow Show with Ryan Littlestone.
Hello traders, hello everyone, and welcome to our Elliot Wave update for our F.A.C.E community. So I want to give you a fresh look on the recent developments on Euro, DAX, S&P 500, and also a quick look at 10-year US notes and the dollar yen. So as you know, euro dollar is moving sharply to the downside for the last few months, and what I see here is actually an ongoing bearish impulse. However, this bearish impulse of course has room for more weakness, but when looking at the big picture, I'm aware that there can be some multi-year support zone here coming in play around parity level. So of course there is room for more weakness, but in the short term, just be aware that there can be some rallies before we finally hit this parity level. So I think that euro dollar could actually stabilize in the second half of this year, maybe after the ECB will finally decide and go with the hawkish policy decisions, and this could be something that will change the flows here on the euro dollar. So looking at the daily chart, to give you a closer outlook here, I'm tracking an ongoing bearish impulse, and what I see here is that I can already count 5 sub waves down within this extended wave 3. So usually after these 5 waves, what you would expect is that market will again make a 3 wave setback. So this is how it works. My market moves in very strong manner in 5 waves, then it slows down for a 3 wave movement, and then another continuation for a 5 wave movement. So what I see here is that we are, as you know, in a very extreme oversold conditions here. Market is very pessimistic regarding the euro, especially because of this situation in Ukraine. So of course, whenever we see the sentiment moving into some extreme readings, we have to be aware that this sentiment sooner or later will change, because this is how the cycles works, especially from the psychological perspective. So I'm aware that that there can be some corrective retracement coming, and this may not be so far away if we consider that these 2017 levels can be a very strong support. Okay, also if you look closer here on the 4-hour chart, or if you are our FA follower, okay, of premium analysis, then you know that we've been tracking this triangle here in a wave for the last week or so, and been expecting this 5th wave to the downside. And so far we have seen a very nice move, but usually this 5th wave that comes out of a triangle are final pieces within a higher degree of uptrend. Why? Because there is a lot of noise within a triangle range. Okay, and usually when there is a ongoing chop, sooner or later traders will give up on potential very strong upcoming move, but when finally you see the breakout, everyone will try to catch this upcoming big move, but unfortunately this will occur with an overcrowded trade, and usually we know what that means, that market will usually just slow down and make the opposite direction. So I'm aware that there can be some limited weakness down here. You also have divergence here, which is very common between wave 3 and wave 5, and usually suggests that market is losing strength here. Also, why I think that euro dollar could potentially stabilize is, of course, because of German DAX. Now, I really like the fact that German DAX is holding some very strong support. But before we go to the wave count, I really want to look at this overlay chart. So in orange we have the euro dollar, and in black we have German DAX. And notice that they are obviously very closely correlated, but what has occurred recently? Well, we have seen a break to a new low on the euro dollar, while German DAX is actually trying to make this higher low. So we closed also above 14,000 at the end of the week. So this looks like a very promising for the bulls going forward. And if we will see more upside here on German DAX, I think that euro dollar could stabilize, which may not be surprised, as I said, based on the Elliot Wave terminology. So if we look at the wave count here, I think that German DAX is trapped in a higher degree correction. It could be a flat, could be a triangle, but just to give you the simple perspective here, the most important thing is that we have seen a 3 wave drop. Okay, now this 3 wave drop can either be a completed correction here and we go back to all-time highs, or it can be part of a complex correction, which is my primary idea. But what is the most interesting part here is that even if we are in a wave B as part of a complex correction, meaning that there will be limited upside, but even within limited upside there is room for more strength, because wave B is a corrective flag, so it should be structured by 3 waves, and this was wave A. And notice that this so far appears to be like a very nice corrective wave B pullback right into the 61.8%, from where we have seen very nice response to the upside. So usually I pay a lot of attention to 61.8%, but it's definitely worth to watch, especially when you see price responding from that level. So far the market respects the level, and I would not be surprised to see more upside. If you look here even closer on the 4-hour time frame, what I see is that in the previous recovery away from these March levels, we have seen very nice 5 waves up, followed by an overlapping decline. Okay, so this overlapping decline normally represents a correction. Because corrections are slow, they represent pauses within ongoing higher degree trends, while impulses are very strong and shows you which is the main or primary direction of a trend. And if you look closely here, you can clearly count 5 waves up here from that low, followed by, more importantly, overlapping decline, as I said. So watch out for potential more upside next week. Of course, what will be the most important is probably this breakout. So if the market can rally above this upper trend line resistance and make a close above 14,100, I think that there can be more upside coming, especially if euro dollar at the same time would already give us some signs of a bottom. And now let's take a look here on the S&P 500. So the S&P 500, in my opinion, is in a long-term uptrend. It can continue. So I always try to look at the market and the price action, so that I always expect further direction within the current moves that is unfolding. So I will very rarely call a multi-year top. That's why I'm trying to count this counter-trend pullback as a corrective wave 4 at the moment. Okay, so what is the most important for me at the moment is that we have a free wave drop. And as you know, always when you see a free wave drop from new low or from a new high, just be aware that this can be a pause within uptrend, especially when you have a lot of pessimism going on. So here I'm looking this to be potentially wave 4. And if you look here on a daily chart, what I really love here is that here at the bottom we have VIX, known as a fear index, and as you can see, we were currently at the upper side of this range. And always when that's been the case, like back here in December 2021, S&P 500 rallied again. Then here in January of this year, we have seen a bounce when VIX index retested this upper side of the range. And now again, we recently moved into this upper zone, and now trying to, of course, then based on past patterns, past readings, we try to call potential very strong support here on the S&P 500. Also, what I like is that based on time and price perspective, we came into quite interesting zone down here. Notice that here I'm counting this as a first zigzag, wave X rally, and a second zigzag. So actually it's a WXY correction where wave X connects the first and the second corrective leg. And notice that the first one was long 221 bars for our, that's 4 hour bars, and then you have now another similar time perspective for the second zigzag coming right into these May 19 levels. So it's quite interesting because you also have the price equality coming into this area down when you compare the first correction to the second part of a correction. So I think this is quite significant. It's even more interesting whenever you have a bounce or response from that level. So if we can see more upside next week, and let's say that we are going to see a 5-wave recovery back towards this former swing high, well, this should be a very strong indication that we are bottoming. So this 5-wave rise is something that I want to see before I can completely say that wave 4 or this deep correction is coming to an end. If I'm wrong, if market will just break to the downside, then of course I will have to adjust the wave count, but I will still try to count this whole correction from this whole price action from the highs as a correction. Why? Because this in the first leg we had a 3-wave structure, not a 5-wave drop. And now let's take a look also on Aussie dollar. Now Aussie dollar I think is coming into some very interesting potential support area. Now, Bank of Australia is turning hawkish, as you know, so I think that sooner or later this pair could bounce, especially maybe when China is back on track with the full economic activity. If maybe stock market, global stock market will try to stabilize, I think that Aussie dollar could be very interesting for a bullish case. Now, looking here at the long-term charts first, well, you have these 5 waves down, and you know what follows after 5 waves. Well, you will see a 3-wave retracement. And so far, we have seen only one leg to the upside with a broken trend line. So this is a bullish confirmation, meaning more upside should occur after a pullback, which is now underway. And I see this pullback coming down as a wave B into very nice support. So I am looking even for a potential head and shoulder formation. Okay, so this is a bottom head and shoulder formation where wave B could actually represent the right shoulder of this pattern. So we are coming into some very nice support here around current price levels, and I'm curious to see the response in the next few weeks, few months. Now, looking at here at the daily chart, well, I'm tracking this as a complex correction to the downside with the recent drop like a sharp 3-wave fall, an ABC structure, but of course for a confirmed bottom here, what we want to see is another 5-wave rise from the lows, because only price can confirm whenever we have seen a bottom or no. So be aware of potentially more upside here, but as I said, maybe from a trading perspective, of course you want to see a 5-wave rise first, because then it would be much easier for you to identify a potential risk. Also, what we have to keep an eye on, as I said earlier, dollar Chinese yuan. Now, if we look closely here, I think the dollar Chinese yuan can be moving into some very strong resistance levels. Notice that here we have this waves 1, you have a wave 2, nice extended wave 3, wave 4, and wave 5. So if we are now in wave 5, what will follow? Well, market will retrace, and V correction would be, of course, supportive for the Aussie dollar and maybe even the whole risk, because if Chinese yuan is going to see more upside, maybe this could be the reason if, as I said earlier, economic activity will be back in full progress in China, and this could have a positive impact on Aussie and even other markets. Okay, and now finally let's take a look also on 10-year US notes and dollar yen. Now, what is interesting here is that the 10-year US notes, okay, have seen recently a very nice reversal to the upside, very nice bounce. So usually this means, of course, US yields are coming to the downside. It means that US dollar could also see a weakness. So that's another reason why I think that euro dollar support may not be far away. So what we are seeing here, based on the Elliot Wave terminology, is a very nice 5-wave drop that can be here in late stages. We recently came out of this wedge pattern, so maybe there is room for more upside, and further upside here, as I said, could definitely limit the upside on the US dollar. Okay, of course, if the US yields in such case would come a little bit down for a pullback, which after that past few months strong rally makes sense, it would not be surprised. Well, at the same time, obviously would expect dollar yen to see some pullback. So dollar yen, of course, it made a very major strong break to the upside. I think that there is room for much more gains to come, but just be aware that there can be some pullback. Now, looking at the daily chart here, we have seen a move into the 261.8% extension, which is the measurement taken of wave 1 measured from end of a wave 2. So that's a perfect wave 3 target of an extended leg, so you can be now in a wave 4. And usually wave 4 can be similar to wave 2 or even more complex. Very rarely that will be smaller in price or in time, so that's something you have to consider. So maybe the wave 4 here will see a deeper pullback. And when looking here at this 4-hour time frame, notice that market came to the downside, it broke this trend line support, so I think that there is ongoing correction here, still ideally in a wave A, so watch out for a wave B rally and then even more weakness. Now, very nice first support would probably I will say that way, ideal support for a wave 4 is the 38.2%, which is here around 124.50, around there. But when you have wave 3 extended like this and very sharp, then wave 4 may not see such a deep correction. Could be just 23.6%. So this is my minimum objective that I want to see here before I can call wave 4 potential supports for this wave 4. So this level comes in around 127, which is exactly at this wave 4 area. So that's quite interesting level for potential bounce. But of course, just be aware that wave 4 should be made by 3 waves before we can completely say that this counter-trend movement can come to an end. Unless this whole wave 4 will be like more sideways rather than deep like a triangle. Okay, traders, thank you very much for your attention and talk to you soon. Bye.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.